I'm here with Nick Calamos, president of Calamos Investments and co-chief investment officer there. Nick, thanks for joining us. This really is the story of the morning, the situation in Greece and the possible ripple effects. How concerned are you about this?
You know, we're concerned from an investment standpoint, although it does point out that you need to be a global investor. You don't want to have your assets all in a single country with poor fiscal or monetary management. You need to be a global investor. So,
is this changing your global strategy?
It will a little bit, because what's happening is there's a lot more pressure on the euro, and therefore a lot of the exporting companies out of Europe are going to probably benefit. From a sovereign risk standpoint, though, the risk levels have gone up, and maybe the fat tails of the distribution are going to start showing up in risk premiums again. So we're going to be a little bit more cautious about the credit risk out there, but excited about the opportunity for multinationals.
I'll get to the opportunity for multinationals in a second, but you said, you shouldn't, obviously, you don't want to invest in just one country, but there really is a ripple effect that we see going on now, particularly with the additional downgrades that we've seen over the past 24 hours.
Sure.
Where's the next problem spot after Greece?
It's probably Spain. Maybe we'll see something happen with Ireland also, or Italy. I mean, the same countries are dealing with a lot of problems. Japan's had plenty of problems. They're able to deal with it right now, but it's probably Spain is the next big leg down.
China, Gary Shilling joined us yesterday and called it a house of cards. Concerned not about the long-term picture in China, but really about, short-term troubles. Do you share that concern?
Well, I do. I think from a centrally controlled economy standpoint, you build houses and they're building infrastructure that, they're waiting for productive capacity to sell to somebody. So to keep the economy going, they're spending. And unfortunately, when you have a centrally controlled economy, they're not going to always put money in the right places. You really want a free capital market where opportunities and economics are both there.
You mentioned multinationals, strong multinational corporations as being a real opportunity. Why is that? What do you mean, and why is that?
Well, the world is going through a shift, and it's going through a shift meaning that the developed worlds have too much debt and consumers are in trouble. And at the same time, the demographics are working against them, meaning that the demographics are not growing. And the developed world has exactly the opposite going on. Strong balance sheets, growing middle class, and they're going to start becoming consumers. So the multinational companies are a safe way to kind of play this emerging theme. Companies that have access to the emerging economy's consumers or businesses, but still have the strong balance sheets of a developed country, the distribution powerhouse, and quite frankly, the capital access around the globe, gives them an opportunity to participate at a much lower risk posture. We're about risk reward, risk management. This is a way to participate in that.
Got it. I'd like to get your take on the financial regulation that just failed for the third time in a vote in Congress just a few minutes ago. How do you feel about what everybody here is planning on coming, but Congress has not passed yet?
I think the government tries to take risk out of everything. They try to stabilize and make sure there's no risk. The problem with taking risk out of things is there's no opportunity. So the financial sector becomes a utility. If these reforms happen, you have less risk-taking, less opportunity, more of a utility model, just like we're seeing with healthcare. Possibly energy is going that direction. So I think the reform's probably a negative, and maybe they're moving too quick. It'd be nice to hear what else needs to be done before you...
Probably a negative. Is there any particular element of the package that's on the table right now that most concerns you?
I think we do need some kind of derivative clearing and some type of insurance reserve accounting for the derivative market. There's a need there. Otherwise, I think it's a lot of grandstanding by politicians to say that we've reduced the risk in the economy, we've reduced the risk in the financial sector. Unfortunately, at the same time, they're spending money and run up debt and adding to the instability of the global economy.
All right. Nick Calamos, thank you very much for joining us today. I know it's been a busy day for you here at the Global Conference. Appreciate it.